If ever we need to get access to our funds because of whatever reasons, we have got an emergency, we've got medical problems, we need to do another investment. If we were into your private company alone, we would not make any money. We won't have any recourses whatsoever. Can't borrow against it. We are stuck. It's lost money. Whereas in a fund, we can exit. We can borrow against it. So this got Chris and me thinking, saying, how do we resolve this problem? And I think we have resolved this problem by offering trading into private shares after 1 year of seniority.
So hi guys, this is Bhavesh here from Tracxn, and we have Amal Sharma and Chris Wickham, who are part of Tag Group. Amal is the CEO of Tag Group, and Chris is the CEO. And it's a pleasure to have both of you guys here. Amal, if you can just throw some lights on how did you start off, in this investment banking industry, how Tag Group came into the picture, and your entire journey towards the market and the industry.
Yeah, hi. Nice to be here. So I've been personally in financial business since 1988. Always into helping clients either to raise funds or to invest their money or both. That has been in essence what I've been doing. So I've used various tools over the years, from normal, regular angels, investors to bring into deals, up to finding many investors put together to invest into one, and then going public, or offering companies, businesses to VCs or venture funds or people like that. The Tag Capital Group is basically located in the UK now. We just incorporated it because we had to streamline our activities with many of our people from our board retiring. So we restructured all our activities under two names, Tag Capital Group and TWEX. Now, why I'm talking about TWEX, because TWEX actually means Tag World Exchange, and TWEX is a proprietary exchange that we have created in order to help companies raise money. So it is only for accredited qualified investors who will come in to invest in there, and for companies that are located the world over, which we are going to list their shares on that exchange.
Oh, fantastic.
What we found out over the time was, mainly for the past couple of years, people have stopped investing because many private companies, they think it's free money for most of them, and they don't give it back to these investors. They don't let them exit, and there are big problems, and they don't distribute dividends. So at the end of the day, many investors say, why am I going to write you a check? I'm not a charity case, so I'm not writing checks anymore. So
wow.
After discussing with them and finding out that many of these people, I said, what do you do with your money? So we put our money in mutual funds, go to
Correct.
Vanguard, BlackRock, Merrill Lynch, whoever funds that we can get, put the money in there. If ever we need to get access to our funds because of whatever reasons, we have got an emergency, we've got medical problems, mainly those in the US where they have to pay for their medical bills. We need to do another investment. If we were into your private company alone, we would not make any money. We won't have any recourses whatsoever. Can't borrow against it. We are stuck. It's lost money. Whereas in a fund, we can exit. We can borrow against it. So this got Chris and me thinking, saying, how do we resolve this problem? And I think we have resolved this problem by offering trading into private shares after 1 year of seniority, meaning you buy the shares, you wait 1 year. After 1 year, you can trade them at places
Oh,
we will indicate you. By the way, most importantly, you will still be private. You are not becoming public, okay? Because you're not big enough to become public yet. You still,
if I'm, yeah,
yeah, you still remain private, but your shares will be traded on a FINRA regulated, SEC registered exchange in the US, where we'll try to create liquidity and enable you to exit. Doesn't mean you're going to exit. It's just that then in your mind you will say, if I want, if I need, I might be able to exit with that. Yeah, let me invest into it because I like this company. Let me do it. And that's
fantastic.
basically what we have created.
So can I consider this as a secondary transaction if I'm not wrong?
It is a secondary transaction, but only
Gotcha.
one year later. It's 1 year after. You need to have 1 year hold on it.
Makes
Then
sense. Makes
afterwards you
sense.
can come.
Makes sense. This is actually a very interesting thing that you started off, Amal. So this is part of 2X that you're talking about, right? And
You-
is it an online platform
yeah,
where
of
you
course, yeah.
actually
You go to TWEX.exchange. There you can read IPSO, which means Initial Private Share Offering, which is an IPO, but a private IPO basically that we conduct for you. And then we list you. If you go to our built-in board there, you will see we have got tier 1 and tier 2 listings. So if you go on the tier 1 listing, it's a listing where we have done plenty of work. Chris, for example, would have done a evaluation of your company to know what is your share, what's the value of it today, what it might be looking at in the future, and what we are talking about here in order to price the shares accordingly. We'll be having prospectus for sale of shares, the same type of the same level of documents that you will have to give to the US SEC, to the FCA, or to SEBI in India in order to be allowed to trade on an exchange. And of course, we prepare that. Our legal department in Mumbai prepares all of that, and we do that in order for the investor, the big investor, to know exactly what he's getting himself into, and he has the impression that he's investing into a quasi-public company because you're a quasi-public company without being public. You see? So that's
wow.
basically what is created. And then once that's our tier 1 listing, of course, which costs money, obviously. Not that much because we kept it at a very low level in order to be competitive and to attract the most people and good deals. And then our tier 2 listing, this one is we give on the information that you give. We don't verify anything. We put it as is. That's for people who are really overextended, and we put it there. In both cases, we communicate in our newsletter. We communicate to some investors. Usually it goes out to about 15,000 people. It goes out. They know about it. Now, will they come or not? Nobody knows, and you can't force them to come, obviously, because then it's another job if you start forcing people to buy things from you. There's another name for that. So we are not doing that, but we'll put it out there for them to take a look at it and then hopefully come.
That's amazing. That's amazing.
In tier one, there we connect with investors directly. We do one-on-one, we prepare them, we do a campaign, we do many things in order to get them to come to get to know about your company, talk to you, and then make a decision if they want to follow it or not. Because we take out all. See, the value proposition is we take out many of the problems that are in that business right now. We take out value. What is the value of this thing? That's what Chris does. He will tell you afterwards how he does it. Get the value out of the way. We take out legality out of the way with our legal department. Take out that, so you don't have to bother about that. Everything is done above board. We take out all of these, the exit later, the potential of exit later after 1 year. We take that problem also out. Now we want you just to concentrate on one thing. Do I like these people and believe into what they are doing? And I want to write them a check. That's all you have to focus on. All the rest, we take care of it for you. So now go ahead. Okay, meaning we're trying to bring it back to as it used to be before.
Correct, correct, correct. Because eventually that is what investors expect when they invest in a company, right?
Yeah.
Is what exit, right, or liquidity,
Yes.
which is extremely difficult when you're investing in a private company, and it is probably 1,000 times riskier than any other uh, options or any other channels that you actually invest your money to in. And I think what you've built, 2x Exchange, is actually one of the a, a path towards, where you're showing the investors like you have liquidity, right? There's a win-win situation for both the parties, the startups founders as well as the investors, right? So you get the money, you get the liquidity, and both are happy.
Yeah,
So, Amal, uh, I'm sure, I mean, you have been in the industry for quite a long time now,
yeah.
and you have seen seasons, right? Uh, Past in the days, the way we evaluated companies, the way we did deals were very, very different than what we are doing and we are seeing right now with technology in the picture, right? And right now, what we are seeing is not just technology, but somebody who is acting or behaving like a human, talking to you like a human, right? We're talking about AI, right? How do you see this changing the entire landscape of investment banking industry
That's
or the transactions?
very good question. Um, you have to embrace AI. If not, you're out of the game.
Right,
Embracing AI made that uh, we were able to streamline our legal department as well as our accounting and sales departments because of AI. So that's a big savings at the end of the month. Let's put it this way. Yeah, it's true that some people lost their jobs because of that. But in the big scope of things, these people have to retrain with the new tools of the world and get used to it and get on with it because we can't keep on going back. We have to move forward. And AI is here to stay and to uproot many things. So we have to deal with it and use it appropriately. Of course, we have to be careful. You will still need the human element to be there to verify everything that is being said and done by the AI because the best of them sometimes are delusional. They will write things that have got no sense whatsoever and you will throw it out. So you still need the human factor to be in there to check things
correct.
out, but you save much time.
So, Amal, there are multiple disruptions going on in the market right now. AI disrupting the entire workflow, right? Then there is something going on with the US side where they are disrupting the market in a very different way, right? Right? Either by tariffs or making difficult to do business or uh, because eventually we are right now a global economy, right? Be it India, be it Singapore, Malaysia, UK, US, we kind of are living in a place where there is a lot of cross-border transactions going on and we are all interdependent, right? So any kind of tariff or any kind of war hits the entire chain and global ecosystem, right? So not only one country falls but the entire
Yeah.
ecosystem falls down, right? So how do you see the next 12 months or the next 8 9 months this year shape up in this industry? Because we are seeing back to back things going on, like COVID and tariffs, and then the Ukraine war, Russia Ukraine war, and then now the Middle East war. This is basically the bigger challenge because it is basically choking your entire crude oil dependency, right? So how do you see the next 12 months or the entire
Well,
year shaping up?
I would say in this whole story about the crude oil, I'm talking about that part, right? I will start with that. Was the Chinese was the most intelligent, as usual. Because
Whoa.
30 years ago, they went out and said we have to repurpose everything. We have to gear towards economy, energy independence for our energy sector. So yeah, they relied on coal a lot, and they generate electricity with that. And today, China is the only market where you have got more electric powered cars selling than anything else. And at the end
Correct.
of the day, who's laughing when a crude oil is hitting $4 a gallon at the gas station in the US? The Chinese, because they don't care. Most of them driving electric car, fine. They haven't seen any difference whatsoever. Things are going on, and in the same token, you can also many factories are being powered by nuclear power, being powered by renewables, and
Right.
actually, if we have the guts to do what it takes and stop complaining, it is the appropriate and proper time to make the shift and get away from that oil dependency. Because right now we are just making a fat shake becoming even fatter and his pockets become
Correct.
even bigger. That's what we do every month when we drive a gas engine cars, so nice. And as long as we'll do that, we will still be complaining, we'll still be having problems and shortages. So we have to embrace. Yeah, actually, many things are happening right now that is making it very hard for people. But you will see in the future, in 20, 30, 40 years' time, when I won't be here me anymore, in 40 years' time. But you young guys like you will see that that was a trigger point in history where those who made the move ahead, the jump into saying, okay, let's go into renewables, like 100%. Let's not stop messing around. Let's go into that. Let's spend the money on it. Let's get away from those ICE engines. Let's get away from all of that and embrace AI. You're embracing everything new technology and making lives better and easier. You will see
Correct.
this is right now the trigger point. That's what's happening. But people will find it out way later. In many years, you will say, yeah, those who did it will be ahead.
Correct. So, Amal, I think this entire electrical and renewable transformation started long back, right? I mean, it would probably we can say 50 years, 60 years back or something like that. But I'm assuming because of this entire economy which was tied up with this crude oil, it was difficult for anybody to move out of that and straight away jump into the renewable energy or say this electric vehicle or whatever we call it right now.
Well, the problem you have there is the following, is that, believe it or not, whether it is in India or Africa, you guys are more advanced. I'll take one example on telecommunication businesses.
Hmm. Hmm.
You guys are way more advanced than here in Europe or in the
Hmm.
US. Reason for that is basically because as you came to that uh, development in your history now, you have been
Yes.
able to invest in the newest technologies that exist, which is what more for
Ah,
better, efficient, much better. Whereas
makes
many places, whether it is in Europe or the US, we are still trying to amortize all the billions that were used to install cable, copper wires, and things like that. So, you guys are ahead because of that, because of the time that you're doing the investment.
correct.
So
Correct. Makes complete sense.
similarly, imagine how many billions it costs to create a refining facility to do things like that, to get the ship that carries
Hmm.
all the things that goes with it. You have to amortize this. It takes
Correct.
time. So you can't just go jump. So always, I'll give you one example. When COVID came, and then here in France, we had something called the Gilets jaunes, the yellow jackets, which were a group of people who were complaining about gas. I mean, in France, they always complain every day anyway. But here they block all the whole country, and wouldn't let you. Wasn't able to drive or to go do things because they were complaining about gas again, gas cost.
Yeah. Yeah.
And at that time, the government did one thing was that they started investing into electric charging systems.
Hmm.
And
Hmm.
me, I switched to electric because of the cost, because I'm always on the road. So when you're paying two euros, 2 euros 50 per liter,
Hmm.
and you have got a car that is using a lot of liters to travel. Yeah, I mean, believe me, after some time, you're thinking, I need to raise my cost of service because I'm not cutting it anymore. Your margin, you're eating into it. So anyway, long story short, I switched to electric. But I can say that in Europe today, you go anywhere and you will always find a charging point because
Wow.
that change was done. But what happened was that uh, I would say petrodollars came in and paid
Yeah.
plenty of influencers who have been spewing plenty of BS. Oh, we need to hear the engine. Need to have the smell. I don't know what is nice to hear a bloody engine roaring in your ears 24/7 when you're driving or having oily rag smells. I don't know what's nice with that. No, but and then we have to do so many kilometers because if not, it doesn't work. You have to recharge. Can you imagine the time you lose? Then I'm thinking, I mean, you guys are bloody damn stupid because, yeah, you don't lose that much time because you stop. I'm sorry. Anybody has, you have to stop after 200, 300 kilometers. You need to stop. It's first of all, security, safety. You have to do that. But when you stop, the time you go out, go to the bathroom, get some coffee, walk a little bit,
Correct.
come back, your car is charged already.
Correct.
So
Correct.
it's no big deal. But then these people, these influencers, stupidly went out and killed the full switch that we did on electric cars. So now we have this new invention of hybrid cars, which is the biggest scam on the planet. You have a car going on with two engines now, an ICE engine, an electric engine, and some batteries. Fantastic.
Correct.
Imagine the weight. And then what happens is that many people, what they do when they're going on long distances, they don't have the time to charge, they don't charge it. So
Correct.
you are using more gas because you have to burn more to carry that weight. So
Exactly. Exactly. So you eventually end up using the ICE engine, and you eventually end up using fuel because it's more convenient, and you just straight away walk into the fuel gas station.
yeah,
And oh my God.
and the other problems stay the same. So
Yeah.
we have to start with a full education of ourselves first and
Yeah.
understand that who is really benefiting from it. Now, some people will tell you, "Oh, but I live in a building and I can't charge there in my building. We don't have that possibility." Then you have
Mm.
to tell him, and you ask them, "But how many kilometers do you do every day?" Oh, 10, 15. Ah, okay. So it means that because that's usually what you do. You're
Correct.
going from your house to your work and coming back if you go by car. So then it means that in 1 week, let's say even you work 6 days per week, okay? You have done 180 kilometers. Yeah, 30 kilometers per day times 6, 180. Your car has got can go up to 200, 250 kilometers for the cheapest one. Okay, I'm not
Correct.
talking top level one. I'm not talking about Chinese ones either. So,
Correct.
a regular European car, 250 on average you will get. So,
Yeah.
did you have to charge during the week? No. So on
No.
Saturday or Sunday, when you go to the market, when you go to your shops or wherever, just charge it there because everywhere you go now, you've got charging spots. So charge it there for the week, and then you go. So stop complaining and being negative, saying, "Oh, but I live in a building, I can't do anything. Look at me." No, come on, get on with it. Just think. People don't think. That's the problem.
I know. Yeah. Yeah. That's the biggest issue that we actually go through. But it was actually surprising, and it was, I would not say surprising, but it was very good to see that the entire Europe basically, you know, they caught up with the entire EV revolution, and they basically they foresee the entire a revolution happening in the EV, and they created the entire infrastructure like 15 years, 20 years back, and by now I think
For
almost.
EV, for EV, no, the EV switch, the EV started in 2019, just before COVID. That's when that switch started, and then it accelerated to because the European Union passed a law saying that we need a charging point every 50 kilometers, every 40
Mm.
kilometers. Sorry, and now you have it. Look, me, I've gone from Lisbon up to Warsaw in Poland. So just imagine how long that is. Never
Mm.
had any problems.
Wow.
Okay, so
Wow.
you are talking, if you do that trip, you are talking about almost 4,500 kilometers. No
Correct.
issues, no problem. So yeah, you
Absolutely.
have the cover everywhere, and here imagine how many countries I went through in the European Union without
Yep.
any issues. So it's
Correct.
things have changed.
So, Amal, we are actually seeing a lot of young generation, getting into this investment banking industry. So we are seeing a huge shift. Uh, Initially, I mean, 20, 15 years ago, 20 years ago, 30 years ago, people were more into accountancy, finance, taking care of accountings, and taking
Doctor,
care of all the finance of a company. But the same people right now are more inclined in the investment banking industry. Um, Probably because it is so glittery out from outside. It looks so fascinating, as you're dealing with multinational companies, you're dealing with companies all over the world, and you're doing deals of millions of dollars, and it is really fascinating, and merging two companies, right? Acquiring a company and helping somebody raise capital, it is not easy. It is the most toughest. part that you can actually do, because it is not only transactional but it is also emotional, right? Because you have to set expectations of both the parties. So what advice would you give to the younger generation who basically want to enter this entire industry?
Run,
Sorry.
run, stay away. I'm, 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 I'm not being facetious when I say that. It's because basically today, look, you come in as a young person starting, huh? So you get into that business. First of all, you think you know everything, but you don't know anything actually. So you have to learn. The
Correct.
time that you learn is changing every so often until the time you find out the basics that you always have to that always exist, which is what is the value proposition of a company, what is the
Hmm.
value of the deal we are talking about, and if somebody's putting money into it, how long for them to get that money back, and other people you are dealing with.
Yeah.
Is the value proposition worth it? Meaning, in some time, will it pick up? Is this a new unicorn? So those will be all of the time the same questions, and that get boring actually. but
Correct.
but
Correct.
but for the young guy coming in, will take him some time to understand that, no matter how bright he is.
Yeah.
Don't ask me
Absolutely.
why. I don't know. We have seen plenty of people like that coming and going. So
Wow.
afterwards,
Okay, they see the entire glittery part from outside, and when they actually enter the world, and they're like, "Oh my God, where did I?" It's like so much of work and so many numbers and so many things to take care of.
but it's not that. It's because you're dealing with so many people doing the same thing, so many potential investors. Money is everywhere, and so many difficulties to get access to investors. So, and at the end of the day, the investor is the one calling the shot because he will decide if he puts his money or not. You can tell him whatever you want, doesn't matter. You still have to. He has to get convinced, and that's the most difficult part. And by the way, before getting convinced, you have to be able to open the door and talk to him.
Correct.
And
Correct.
for all of these young guys, what they don't know is that this deal is very soul destroying because they will contact like maybe 10,000 people, 10,000 emails they will send out, 10,000 phone calls they will try to make. Maybe they'll get one or two who will talk to them.
Yeah. Yeah. I mean,
It's
it is what it
very,
is.
very, very bad.
Yeah.
So and we have seen many of these young people coming to us doing internship here, and then we set them up, get them to do those calls and do everything. After some time they just run away because they are burnt out, because basically it's just not working. it is,
Correct.
it is a problem.
Yeah. I mean, see, raising money is an art. I mean, it is not a cakewalk. I mean, you just can't walk to an investor and say I need $1 million and they will give it to you, right? And it is extremely difficult to convince somebody to give their hard earned money to you to invest in the company, right? And
that,
most
that,
of the time
that is
you just get rejected.
That is why we created our exchange and the exits potential, the liquidity exits
Correct.
in 1 year's time. That's the reason
I think
why,
that's
because
that's one of the best.
we were seeing this problem a lot. We're still seeing it, and we'll continue to see it. Why
Mm,
should I give you the money?
mm,
Uh, because many, and also the other problem you have is that many of these companies, when they are young companies which are starting up in life, they don't have any financial, how you call this, rigidity, and they don't know how to manage money, and they will splurge and spend on things that have got no consequences whatsoever,
correct.
and the money will
Correct.
be going very fast. So that's also a big problem that you have, and that is why some investors are saying, I don't want to be on your board to see what you are doing.
Yeah.
I've got other things to do in my life. I can't be a chaperone. Oh, that's getting too complicated. And that's it. The minute this guy thinks this deal is complicated or there's something not right, the deal is dead. He's gone.
My
And
God.
when you are a young guy starting, because that's the question you asked, when you're a young guy starting, you don't know words not to use and words, what words to use. And you will
Absolutely.
invariably say something that will make him run away. And then you will say, ah, this is a bad job. It's not working. I need to go do something else.
Absolutely. You just have to adapt to things and eventually keep learning from the mistakes that you do. And basically with the guidance of a mentor or a senior person, an experienced person, you can actually go a long way.
If you listen.
listen, exactly.
Because,
And that's
many of the young people, they don't listen anymore.
they absolutely don't listen. Absolutely, I completely agree. I'm somebody who's part of that, so I can. I've thankfully started listening in the last 2 years, but I did not in the last for the 8 years almost after my college. Yeah.
Okay.
So Amal, yeah, thank you so much. It was amazing talking to you.
You.
And very nice conversation that we had. Spoke about a lot of topics over here, and I hope the audience will have something to take out of this, take from this.
I hope so too. Thank you.